So what's a great way for someone to pay off the mortgage quick?
By increasing their frequency of how they pay their mortgage.
So instead of just monthly?
Yeah, go bi-weekly or match it up with your pay. How are you being paid? Every second Friday?
Good
Pay at the
idea.
same time with your pay.
Okay. So how could that look for someone as far as accelerated payments? Like how much are they going to save?
You're going to save a little bit of the interest, and we're going to base it over a 5-year period. We average do a 5-year term on your mortgage. So if you just started with a 5-year term and you paid it monthly, and we're basing it on a $400,000 mortgage.
Okay.
So over that 5-year term, you're going to pay almost $64,000 of interest.
$64,000.
It's a big number.
Okay.
Okay, so now you just decide, let's not pay monthly,
Yep.
accelerate bi-weekly,
Okay.
every second Friday. You're going to save just over $1,000 of interest. That doesn't sound like a big
From
number.
64,000 to 63,000.
Yep.
Okay.
So now you just saved $1,000 of interest. But the kicker is that you actually, all that extra payment went towards your principal balance.
So you're actually paying your equity now faster.
Yeah, you just paid $11,000 more towards your principal balance.
Okay.
Yes.
Good news.
And the simple math on that is monthly payment divided by 2, spread it out over 26 payments now. So you officially are making one extra full monthly payment in a calendar year.
So sort of like a forced savings plan.
It is.
Okay.
Yeah, that 1 month payment goes directly against the principal.
Excellent.
Take it further.
Yeah.
Okay, now you feel a little bit more comfortable bi-weekly. You want to just increase that mortgage payment a little bit itself.
Okay.
So not a big
You round
jump.
it up or something?
Yeah. So on that monthly payment on a $400,000 mortgage was almost $2,000.
Okay.
Cut it in half. Now $1,000 every 2 weeks.
Yep.
So bump it up to $1,200 every 2 weeks.
Okay.
Now you start seeing the savings.
All right.
So now you've saved about $3,500 of interest over that 5-year period.
Okay.
But you paid an additional $40,000 towards your principal
In
balance.
5 years.
In 5 years.
Okay. Wow.
So that balance originally was $400,000 mortgage. Now at the end of that 5-year term, you only own $304,000.
That is it sounds like crazy math,
Yeah.
but that is just a great way to do it.
I can even take it another step.
Okay, there's more.
This was based on a fixed rate.
Okay.
What if you went into a variable rate? So now you just drop that fixed rate of 3.45 down to 2.6.
Okay.
But you still pay it like that fixed rate of $1,200 bi-weekly.
All right, that forced savings plan, yeah?
Yeah.
Okay.
Okay, here's the big number. So you just saved just over $19,000 of interest
Yeah.
over 5 years.
So at the very beginning, we talked about saving $1,000
Yeah.
by going bi-weekly, right? And
Yeah.
now you're talking saving $19,000?
$19,000 of
Okay.
interest. Because you've lowered your interest rate, you went into a variable rate, and
Sure.
this is assuming your variable rate stayed at 2.6% for 5 years. Take that into consideration.
Okay.
But what you can do in those years when it is low is knock down that interest amount you're paying,
Yeah.
but now what you're doing to your principal balance,
Oh, gotta hear this.
another additional $56,000 off your principal balance. So that $400,000 mortgage is now $289,000 after 5 years.
Holy cow. And that's how people get ahead in real estate, is actually paying their equity down quicker. Because that's one of the problems when people continually refinance to their maximum. They want to start paying some bills or something like that, and they never get ahead. It makes it harder for us when we try to sell somebody's house.
Oh, absolutely.
Yeah.
Yeah.
Good math. Good to know.